Jerome Powell's term as Fed chair ends today, and incoming chairman Kevin Warsh has a balancing act to do from day one, with the president demanding those lower interest rates even while those high gas prices send inflation skyward. Fox's Caroline Shively has the latest on this from Washington.
I've held back firing him. I've wanted to fire him, but I hate to be controversial.
Jerome, too late Powell. He's always too late. And he's very late with interest rates.
President Trump has been pushing for Jerome Powell to step down as Federal Reserve Chair for more than a year.
If he asked you to leave, would you go?
No.
Now it's finally happening. Not under pressure from the president, but because Powell's second term is up.
I'm confident that the Fed will continue to do its work with objectivity, integrity, and a deep commitment to serve the American people.
President Trump handpicked Kevin Warsh as the Fed's next chairman, hoping he would cut interest rates. The Senate confirmed Warsh Wednesday.
The nomination is confirmed.
But that follows April's inflation rate coming in at a higher than expected 3.8%, driven in part by soaring gas prices stemming from the Iran war. Warsh now faces the same dilemma as Powell has. Lowering interest rates can push inflation even higher.
I do think it's a test, though, and all chairs get tested in their first 6 months.
But high interest rates cause problems of their own.
Part of the reason they can't cut rates is because of the war and prices. And what does that mean? Higher mortgages, higher credit card interest rates, higher student loans. And then you see the cost of food and the cost of gas and the cost of farmers of urea, ammonia, and nitrogen and their fertilizers.
Powell plans to stay on as a member of the Federal Reserve. His term on the board expires in 2028. In Washington, Caroline Shively, Fox News.
Thanks for that, Caroline. And I'm going to put up this X post on your screen coming from the Washington Post saying Jerome H. Powell steps down Friday as chair of the Federal Reserve after running the world's most powerful central bank through a pandemic, the worst inflation in 40 years, and an unprecedented assault on the Fed's independence. So today marks that major shift for the U.S. economy as Kevin Warsh officially takes the gavel as the new chair of the Federal Reserve. The Senate confirming Warsh on Wednesday in a narrow 54-45 party line vote. Outgoing chair Jerome Powell did not leave the central bank entirely. He remains on the Federal Reserve Board of Governors, where his term will run until January of 2028. That fresh data showing inflation is still running hot, and speculation is already mounting over whether the Fed will be forced to hike those interest rates when they meet next month. But what does this leadership change mean for everyday businesses? Joining us now to break it all down is Dan Baroni. He's the author of Rethinking Economic Growth. He just published a brand new op-ed.
So I think it's going to be tackled considerably differently. Kevin Warsh's background as a member of the Fed Board of Governors and as a highly successful business executive brings a different focus. And that focus is around narrowing the mission of the Federal Reserve. And what I mean by that is that the Federal Reserve has been expansive in its focus. It's gotten into quantitative easing and dealing with shocks to the economy. What Kevin Warsh wants to do is narrow the focus of the Fed to what he sees as predictability and certainty and focus it around inflation. Now, for small businesses, and I've talked a lot about small businesses all the time, certainty means everything. For Kevin Warsh, he wants to deliver that certainty. Right now, he sees the Fed as having its fingers in too many pies and wants to narrow the focus.
So you had mentioned that Warsh's framework is fundamentally different, citing it's maybe more disciplined and less interventionalist. What's the immediate ripple effect of this leadership change on the markets versus the reality for businesses on Main Street?
So I think we're not going to know the immediate effect on the markets until he officially takes over as chair, and I believe he'll be sworn in sometime late today. So we'll start to see some of that next week. The Federal Reserve doesn't have its first open market committee meeting until the middle of next month in June, but he'll be working behind the scenes. He'll be looking through all the data, all the numbers. He'll be meeting with the Fed Board of Governors, getting soundings from them, and begin to chart his path.
So you had mentioned to me that even though the Fed, of course, doesn't meet again until June 16th and 17th, we should be preparing for those serious discussions about that potential rate hike. With those prices still high, do you think Kevin Warsh's first major move is going to be raising those rates, or do you think their hands might still be tied?
Well, so there's two issues actually three issues on the table, three ways they could go. They could keep the rates where they are and say, we're going to continue to watch the data. They could cut rates, or they could increase rates. So let me talk to the increase rates piece. Now they're all, the markets are saying that there's a 65 or 70% chance that the Federal Reserve will increase rates. So here's the issue, that if we're going to look at an energy price shock and compare it to what happened in the 1970s, it's a big mistake, because we're not comparing apples to apples, right? We don't have any wage price spirals going on. We only have an energy and oil price shock. That's what's going on. Before this happened, prices were coming down throughout the economy. When the Iran conflict started, the Strait of Hormuz closed, we started to see prices going up. It would be a fatal mistake for the Federal Reserve to do that. Now, on the other side, there will be pressure for the new Fed chair to cut rates. Now, in the middle of an energy price shock, that will also be difficult for him to do. My sense is that he will build a consensus around, let's stay the course for now, and let's ride out this energy price shock and not create any other problems in the economy. Because if we raise rates, the stable employment situation could deteriorate. Businesses, like small businesses, will stop borrowing, will stop hiring, they'll stop investing. So for the time being, let's leave things as they are and see how this energy price shock plays out.
So, you mentioned the 1970s. Whenever you talk about that stubborn inflation and those high interest rates, people immediately panic. They think back to then. And you believe that's not the case. What would you say are the key differences between those inflation drivers of the 70s and maybe what we're facing right now?
So what was interesting to me when I researched back on it over the last couple of weeks is that we saw wages going up at outrageous numbers. So you had inflation that was going up dramatically, and you had employers that was looking to match it, and we had what was called a wage price spiral, and it kept happening. So now what we have is you've got wages and inflation not even anymore. You've got inflation that is surpassing wages. Inflation is somewhere now at around 4%, and wages are at about 3.7%. So we're not seeing the same thing happen again. And because we're not seeing the same thing happen again, why would we raise rates? Why would we want to send a shockwave through the economy and send that message to the economy? It would be a huge mistake.
You wrote that for small businesses, the predictability of borrowing matters almost as much as the rate itself. Are local business owners maybe sitting on their hands right now because they just have no idea what the Fed is going to do next month?
They've been sitting on their hands for years. When I conducted my book interviews, what was significant to me, clearly a lot of unpredictability and uncertainty around federal policy. But when we talked about the Federal Reserve and interest rates, they weren't quite sure what was going to happen next week, next month, and next year. That caused a lot of hesitation for them. And I believe that small businesses right now are absolutely uncertain. And if we make the mistake of raising interest rates, we will be sending the wrong messages to the part of the economy that represents 99.9% of the country's businesses.
The Fed has two big jobs, of course, fighting inflation, maximizing employment. Kevin Warsh is widely viewed as an inflation hawk. Do you think small businesses are worried that his strict discipline on inflation might trigger a contraction in the labor market, or are they actually welcoming maybe a cool off in that hiring competition?
In the latest National Federation of Independent Business survey, small business optimism was up a bit. I believe it was up a bit because they knew that Jerome Powell was leaving and Kevin Warsh was taking over. I think it's a very positive sign. I shared my op-ed with the small businesses who were in my book, and I got positive feedback. around it's about time, and we're very excited to see Kevin Warsh as chair of the Federal Reserve. I think they're energized and pleased with Kevin Warsh in that role.
You call inflation a hidden tax that compresses margins for small businesses. If you're a local contractor or a manufacturer right now watching Kevin Warsh take over, what is the #1 signal that you are looking for to regain confidence?
So I think the big thing is Kevin Warsh going to stick true to his word and deliver certainty? Is he going to narrow the Fed's focus and mission as he promised? Are we going to have predictability and certainty around interest rates? Those will be the key indicators for small business owners all around the country.
Let's look at the calendar. Kevin Warsh is President Trump's pick, and his term as Fed chair will outlast the current presidential term. If the White House, let's say, flips in the next election, then a Democrat president will inherit Trump's Fed chair for over a year. What happens to market confidence and Main Street if we get, a new administration that completely clashes with Warsh's monetary policy?
Well, there is still independence of the Federal Reserve. It will be up to the Federal Reserve Chair to manage monetary policy as he and the Federal Reserve and the Federal Open Market Committee see fit. If there are differences are fine. The new president will have an opportunity at the end of Kevin Warsh's term to either reappoint Kevin Warsh or to appoint someone else.
All right, Dan Baroni joining us here on Live Now from Fox. Thank you so much for your expertise. We always appreciate it.
It's a pleasure.
Of course. All right, I'm going to put up this X post there on your screen coming from the Federal Reserve saying, as Chair Jerome H. Powell's term as chair concludes, and with the swearing in of Kevin M. Warsh as his successor pending, the Federal Reserve Board on Friday named Powell as chair pro tempore. The temporary action to name the incumbent as chair is consistent with past practice during similar transitions between chairs. Powell will serve as chair pro tempore until Warsh is sworn in as the new chair. That X post there coming from the Federal Reserve.
Yo, what's up, guys? Thanks for joining me. It's super late Friday night here where I'm at, but we're going to be looking at some weekend candle price action here, post-Fed pivot, and most of you guys are going to catch this tomorrow morning, so we'll see what happens, man. But, in the last 24 hours, Bitcoin has lost its May VWAP, which is a really critical support kind of dictating whether sell in May has any type of credence. So, recently we just lost that May VWAP. And we also lost the rising 20-day trend here, which is still sloped up for now. But perhaps not for long, guys. We're under a declining 5-day trend and a declining 200-day SMA macro trend. This declining 200-day SMA, a lot of sellers coming in, guys. We're not even hitting that line. I mean, the sellers are coming in before we even hit that resistance. But God bless you guys. Thanks for tuning into the channel here. We cover Bitcoin analysis almost every single night. And we go over everything we're seeing with the VWAPs, with the volume and market cipher. But, I don't necessarily think it's the best time to short because, we are coming to the bottom of last week's range, right? So this is our weekly range. And looking for shorts at the bottom of the range is a little bit late. I mean, ideally, you got positioned at this lower high here, So, there's a move that's currently commencing here. I think it's potentially likely that we come down and take out this previous weekly low And this support is going to be extremely important to get back over, or else I believe the next step for Bitcoin would be back down here at the quarterly VWAP. The reason why a return down here makes sense is because, you know, you get this month of May, this May VWAP, and all the volume from the last month from back here is actually down here where the Q2 VWAP is and the year-to-date VWAP is. So for every day that we stay under this white month-to-date VWAP is another day I believe that it becomes more likely that we go down there. So the directionality is down, although I will admit that there's a twang of sidewaysness to this. I do think some buyers may come in, at least for a long scalp, you know, on some sweep of this previous weekly low. You know, there's a lot of heat kind of just with a simple retest of the month to date into that declining 5-day SMA. You could get another rejection and a lower low if Bitcoin did something like this. That fits the heat map here. You know, we've got a lot of heat up here at 79,900. And also some heat down below beneath that previous weekly low. So this is the type of trajectory I'm assuming, unless Bitcoin magically gets some sort of like rocket pump back on the other side of the month to date, you know, vindicating the 20-day uptrend. That, you know, that is a possibility still at this point due to the slope of this 20-day trend. But the time is running out, and, you know, historically, these Fed pivots, like when a new chairman comes in, guys, it's usually a bearish moment for the markets. You know, we look at the traditional markets, and it doesn't look like you want to buy this. I mean, we're at all-time highs here on the S&P. Depending on this weekly close, you know, this could end up looking like a bearish weekly close. It's a tough thing to try to call the top on, but, you know, this current weekly candle that we're looking at on the S&P, along with the timing of this new Fed chair and this Clarity Act, whatever. You know, look at the NASDAQ, guys. It's actually a red kind of reversal weekly candle there. So this is like real sell in May evidence, guys. This, I mean, I'm not saying it's guaranteed to go down at all. You know, I'm not a financial advisor, and we're just looking at indicators here. But, you know, that RSI on the NASDAQ, it needs a little time to lose, you know, these high levels here. But once that RSI gets lost, you know, you can kind of see there's the beginning of like a wave turning down. The yellow oscillator is aiming down. The RSIs very easily could just like lose that like that. You know, look for those signs emerging in the next week or so in the regular financial markets. And the timing of it around what Bitcoin is doing is a little bit sus, you know? Like, Bitcoin's at a big confluence of resistances. First of all, we might just be deviating a little bit over Q4's low. So price really needed to come up over this resistance, flip it to support, and show strength here. What I think is happening potentially, if we keep staying under this May VWAP, guys, is that you know, we're not getting accepted into this previous quarterly macro range up here, or even hitting this. You know, these were our quarterly ranges, right? But you know, this is the first big area where you could find yourself longing a bull trap, you know? Now, if the bears fail here and we do go higher, then the next resistance is all the way up at like 100K. You know, Bitcoin hates trading in the 80Ks. But can Bitcoin get like a laser zap move to the upside in a bear market, I think that's the less likely case. If it does happen, that is max pain. That would be like super max pain to wipe out an entire quarter of shorters here. But in a bear market, I think the bears are like, the bears should be safer than that. You know, you would expect like this resistance pretty much to hold here. You put a VWAP at that all-time high, and we're right there at that resistance. So we've got an old quarterly low, a VWAP from the high, and on Leapfrog, we've got that institutional SMA, the 200-day simple moving average, bearing down on the price there, guys. I think the likelihood of a bull trap is actually quite high, you know, so long as we remain under this May VWAP, so long as we remain under a declining 5-day SMA, and this 20-day SMA is on the fritz. You know, it's a risky time. Some buyers could come in temporarily at this old weekly low right here at around 78,200. And that's pretty much Custard's last stand right there for the bulls before a deeper correction comes. Now let's do a quick market cipher top down here. So the monthly trigger wave still hasn't confirmed any type of green dot yet. And, you know, observe the monthly candle here. We are getting sellers. We're actually underneath the high wick of the previous week. This right here. So that was a support. Now it's lost, and now it's a resistance. That old weekly high. Let's see if I can zoom in and see. All right, so that's like a critical resistance here. The 2-week isn't showing much other than, you know, the wave has cooled off substantially. Not really showing any signs of pinching down to the downside yet. It's going to be a while before we see bearish confirmation on this 2-week chart, guys. Now, the weekly chart is something that is a little more susceptible to a bearish trigger wave at this point. We have to monitor, you know, if there's going to be a bearish engulfing and a return back to like the Q2 VWAP or something. That could bring this oscillator down, but the weekly momentum has not really shifted to the downside quite yet. We're kind of like on our way there. These RSIs do look kind of weak. You know, they have come up over the 20 level, which gave bulls a little bit of hope, but also, you know, money flow's thin right now. We're at some big resistance. The daily chart, you know, the daily chart has been super choppy with these multiple headed waves, guys, but the overall picture of it has given us a pretty solid bear div where price has come up into that declining 200-day, and we've gotten lower highs in the price. So lower highs in the oscillator, I mean. So the price went higher. The oscillator went a little bit lower here. The green money flow wave seems to be kind of rounding out here. Perhaps in its last 30% or so. Yeah, you know, losing this double top, like these old weekly highs right here. It was a really great support. We got a nice support bounce here, a nice support reclaim there. But we keep getting attacked. That support keeps getting attacked, guys. Meanwhile, the bears seem to be getting stronger, coming in faster. Bitcoin creating these lower highs, creating a triple top here. It's potential. Kind of like a triple top here, guys. With left shoulder. I mean, this is an ugly head and shoulders, but Bitcoin loves ugly head and shoulders. So it's a bearish slant. I know yesterday we were paying extra attention to the fact that the 20-day SMA is still sloped up. So yesterday I was a bit hopeful. We were in the middle of this big green wick, but unfortunately it got unvalidated. We're back below the month to date here, so this is not this doesn't look bullish to me, guys. But what I said about the slope of the 20-day SMA, it is still somewhat sloped up here, which is why I think that, this previous weekly low in the bottom of this weekly range, we could fight around here for a while. I definitely think we could come up and get rid of these people up here around the May VWAP. Like, you could come and hit that month-to-date May VWAP as resistance real quick. But, the 5-day trend is down, and it's not going to take too long, just a couple days of action underneath this May VWAP to turn this 20-day SMA to the downside as well. So, these are some bearish signs that we'll be looking out for, and if a downtrend emerges, that's a good thing, because it's a new trend, and new trends give new trading opportunities, and it's like a fresh slate. So if you've had a hard time trading in this recent uptrend, maybe the new environment could do better for you. If you guys want to get breakout challenges, my code is just FG at breakoutprop.com, link in the description. If you want to do crypto prop trading and try to hit some of these moves. And then Market Cipher, 40% off with code BlueWave there. And yeah, man, just catching up with the chats real quick. We got Zoinked, Hyken, Mashitatos, Isaac, Samuel, Julia, Splashfire, Jack and a Crack, and Jack's Win. Thanks for coming in, guys. Hell yeah. I almost didn't stream tonight. I was a little tired. I was running super late. But it's such an important date with this new Fed chairman that I had to come out no matter what. Even though I'm coming out a little bit late, I want you guys to have this information when you wake up in the morning. The stream is called Sell in May Signs because we've officially lost this May VWAP. We showed weakness under it initially, but that rising 20-day trend bailed us out temporarily. It wasn't sustained. Now we're back under that May VWAP, back under here, and we're in the gulag. We are, in fact, in the gulag with one final support left, guys, the previous weekly low. If that doesn't hold, man, then, it's likely GG. I think if Bitcoin gets a monthly leapfrog, which is that move from the new month to date to the previous month to date, I don't think that's the end of the downtrend. I think that the 5 and 20-day trends get pulled down, and there's a big risk that this really was like a macro top. I know it's crazy. I know it sounds like it's coming fast. It's coming. It's not coming out of nowhere, guys. We just got a new Fed. Clarity Act. Big resistance. It's, right now under this May VWAP, guys, it's a little guilty until proven innocent in my eyes. But, if proven innocent, we can talk about, these higher quarterly ranges here, like, this resistance up here at 98. But for the time being, man, it behooves us to respect what we're seeing here. 8 Lug says, the Triple Crown is heavy. Yeah, man, we've got a nasty Triple Crown, leaving would-be shorters in the dust here. People waiting for a liquidity sweep. People waiting for stops to get hit. Getting left in the dust here. It's a different scenario than over here where you get that advantageous entry. You know, it's almost like we're even more bearish now. You know, it's really up to Bitcoin to hold that year-to-date VWAP there, guys. Once you reconfirm bearish for the year, it becomes very obvious that the bear market is still on once we lose that year-to-date VWAP. So, you know, that's a really critical support as well, around 74 to 75K. You know, so if Bitcoin did find its way down to down here, it has to, I think that's like a almost kind of like a must hold. You would want buyers to come in there and have it come back up for it to keep going bullish. But man, the slope of that 200, you know, doesn't the slope of that 200 just look like it needs a really long time to smooth out? I mean, this is the first time we've hit it in the bear run, you know? So, I mean, usually that first time you hit a big institutional moving average like this, it's a violent, it could be violent, you know? So we've already lost some critical supports like the May VWAP, but you know, it can continue to get progressively more bearish if we lose the year to date as well. You know, looking at this broader quarterly range, you have last quarter's high. You know, in January, we were up high at the start of January this year. We went all the way back to... we just had a quick tag of the previous quarter's VWAP. Like if you put a VWAP on October 1 of the previous year, and then you could also just put one at the all-time high as well. There's a nice little double confluence there of an interval-based VWAP and a technical-based VWAP. You know, both of those marked that high there. And then back down here when everyone was saying that Epstein is Satoshi, when I was in Philadelphia, that marked last quarter's low. So, you know, this is the macro range that we're dealing with. I think that a lot hinges on this old quarterly low resistance here. I think that, you know, price action above this resistance implies that, you know, we're coming up here to the previous quarterly high. But rejection and downtrend and ugliness under this line confirms it as resistance, and it makes you think that the bottom of the quarterly range is on the chopping block. Now, there was a local high right here put in March. That was your March high. So if the quarterly low is on the chopping block, then the bears want this support to be lost. Like if you come down into this, they want this to be lost. That's a major support right there as well. Yeah, man, we'll take a look at some altcoins here. Altcoins have lost their May VWAPs as well. You know, XRP had some good attempts to get back up there and get that quarterly leap, but right now its 20-day trend is being tested, losing that May VWAP. Still holding the quarterly VWAP, but let's see, Ethereum here. Coming down into a previous weekly low. You know, this right here is actually an advantageous place to actually potentially look for a little long scalp. Just because it's that previous weekly low, it's a level where, you know, there's a lot of shifting and rebalancing and stops getting triggered here. We do see an ascending type of little pattern here on Ethereum. So, you know, you could get a little long scalp here. The most obvious anchored VWAP pool would be from up here. So, you know, you could just... There is a little long setup here on Ethereum where you could just super easy little scalp just right up to that VWAP. I think that it's looking good for that, but you do have that declining 5-day trend. You lost the month to date. Ultimately, I think that this support here is just getting, you know, it's getting absorbed. I think it's probably going to go lower eventually, guys, but it does look like there's a little reaction happening here on Ethereum. I don't like shorting at previous weekly low. I prefer to short closer to the previous weekly high. The only problem is that ETH has not come up and given you like an advantageous entry. Yeah, man, we'll take a look at Near. We got someone in the chat talking about Near. I just enabled stream memberships, so you guys are able to subscribe to the channel, but truthfully, like, you don't have to do that. Just the first link in my description, if you get my WAP here, which it's 500 per year, but it's 50% off with code VWAP, I'll give you this VWAP and support resistance indicator. I'll give you the Discord that comes along with it, where I do streams, summaries, updates, trades. We got educational videos in here and all sorts of stuff. So subscribing to the YouTube channel is kind of like a cosmetic thing. Just do that if you want to have like yourself highlighted in these YouTube chats. But yeah, man, let's look at Near real quick. Near seems to be, I mean, look at that money flow dying out here. Let's see. Even on the daily, that money flow's come out on Near. You know, Near is rejecting off that declining 200-day. Money flows crossing into the red. Weekly swing failure pattern, actually. I mean, look at this. Something interesting happened here that gave you an obvious clue that a top could be in here on Near. There was a high put in on Sunday, and then during this week, we came up and we took that high. But now we're back below it. We got accepted back into the range. So, you know, the range that we got accepted back into is this one right here. So I think Near, given that it is shitcoin, it has an opportunity to come down in here and take out this whole range, man. There could be a big short here on Near. I really don't like that. I don't like the structural bearishness of that declining 200. That's a nasty resistance, man. That's a nasty downslope trend. For now, interestingly enough, still holding that May VWAP due to some crazy pumpage that it got at the start of the month. But, you know, that month-to-date VWAP is an important level. If Near loses that, you probably get further down. And looking at Hype, guys, Hype got another, like a weekly sweep as well. Check this out. Waves trending to the downside. The weekly range appears to be I mean, going into the new week, that's going to be the weekly low. We're already in the weekend already, so ugh, man, coming up and taking out the high. It might be coming for those lows. Just be careful on Hype. Zcash, there's a lot of things that are kind of like in agreement. Like Zcash hit this 786 retracement right on the dot here, guys. And it hasn't been doing hot ever since. It's just lost its May VWAP. And that is like the first line in the sand that the bears come in and like create that lower high. So, you know, it's not conclusive, but, you know, it's Zcash is in an overall up and to the right 200-day trend. It's unique from other cryptos, so it has that wild card factor. But this is not a good sign, man. You know, I mean, if you're bullish, you're hoping for some lower prices and a pullback, anyways. Because longing the 786, as you can see, is not a good idea. You know, Fartcoin, Fartcoin's kind of telling here too, because Fartcoin's rejecting that 200. It kind of just came up and swept this April high and just got reaccepted back in the range. It makes you ask, where's the April low? April low is like down here. So Fartcoin's probably coming down. And Fartcoin might be about to become a real shitcoin. It might actually start. Imagine the smell. Imagine the smell if that happened. Man, look at Sui. So Sui had this crazy like algo rip into that declining 200, but that was the top. And it's like now we're back down under the May VWAP. Lost the year to date. Damn, man. It seems like, you know, we were looking at the 200-day for months. And it seems like that 200-day moving average, guys, did a really good job of marking a little top here. So I'm going to keep using the 200 MA. I'm really excited for like the time in history where that 200 MA starts sloping up again. I'm not going to shut up about it. I'm going to be yapping about it forever and ever. If Bitcoin can scoop itself out of this big downtrend. But for now, guys, it's the first, you know, you got to give it some time. Give it some time. I still believe in Bitcoin, but it probably is going to follow that 4-year cycle timing. Like these, that's the most likely scenario. So, you know, there's certain signs that invalidate the bearishness, like reclaiming the May VWAP, scooping the 5-day SMA back up, you know, like keeping the 20-day trend going up instead of pulling it down and sideways. The environment could click back online theoretically, but my base case is to go along with the directionality of that monthly VWAP. And, yeah. Super late stream today, guys, but I actually have 43 of you guys in here right now, so that's great, man. I'm sorry I came out so late tonight, but hopefully you guys watching in the morning we'll have a good time catching up on this bearish analysis. Yeah. And that's pretty much it for me, guys. I mean, it's already late. I gotta go to bed. So I wonder what's gonna happen. But if you could, on the way out, please smash the likes, hit the subscribe if you're new. And actually, I'm gonna take tomorrow off because tomorrow's Saturday. But I'll be back Sunday for you guys. We're going to map out the weekly range, and it's going to be a good time. So, meet you guys back here on Sunday night, and much love. Good luck in your trades, and peace out.